All right, hello traders. Let me get rid of the echo here. This is Red Ben, and it is Tuesday, June 27th, 2023. You can get a hold of me on Twitter. Follow me at Red Ben Trader. And then if you want to learn more about the algo that I'm using, or if you want to join us in the trading room where we trade futures, contact my coach, Simon. His email is trade, the letter N, wordperform at gmail.com. You can ask for, I think it's a 5-day pass now, to check out the room. I'm not honestly not sure if there's still spots available, but there will be. It's just he grows the room very slowly, so that everyone kind of stays on the same page. So, yeah, give Simon an email if you want to learn more about that stuff. But what we're going to do today is primarily review the trading day. Today was interesting. I did fine, but I thought the challenge today. Sorry, Ronan's always noisy, so if you hear him meowing, I apologize. The interesting thing to me was that while the day ended with a clear trend day up, it was not your typical trend day, but it was relatively easy to like sniff out that that was likely what was gonna transpire, if you knew what to look for and where to look for it. But it started out like a very choppy balance day. And yeah, so let's just get into it. But I want to make sure people pay attention to the fact that like you don't have obviously this information, what happens, what when the day opens. So when you first look at it, it's just like, oh, why wouldn't you just be a buyer all day? I can see I should be buying the blue areas and just like that might seem obvious in retrospect, but the truth is when you are looking at this just you know 30 minutes into the session when some like positive economic data comes out, it's really easy to short in the hole and get totally annihilated, right? So it's really important, especially with futures, but honestly, anything. But if you're going to, especially if you're trading the indexes, I would say, but even futures like CL and stuff like that do this as well, but especially indexes to the upside, they just love to dig holes and then invite like set a trap basically and invite sellers to try to take that level back. And if they don't do it, there are just so many like liquidity flows, order flow to the long side, just waiting to like blow them up. So it's just a lot easier to put the indexes up than 1% than it is to push the indexes down 1%, and that's just the way it is. We're not going to get into whether or not that's fair or whatever. It's reality. It's the market we have. If you don't like that, then don't trade the indexes. Trade something other than equities, because trade bonds, maybe trade CL or sugar or whatever. So just not the equities, because if you think about it, there really aren't any flows of like sellers, unless there's someone exiting a position. When it comes to really big funds, there's certainly not any profitable funds that are just selling. All the profitable funds, whether or not it's hedge funds or what's it called, pension funds, 401ks, everywhere where the money comes from, yeah, even like some of the government funding and stuff from like foreign governments, it's all, if it's going to equities, it's all long equities. Do some big funds like short equities as a hedge? Yeah, for sure. But they only do that to pre- prevent uh, big down days from hurting them. And the reason big down days would hurt them is they have a net positive flow of money into the equities. So it's like by admitting that there are huge funds that hedge with by shorting futures, you are also admitting that those huge funds are flowing money to the upside. So it's essentially because of that that it's very hard to get big down days, and it's even harder to get two big down days in a row. And now that does change a little bit when you've got like a true bear market where there's fear and uncertainty, not just like wall of worry, but when VIX isn't like under 20, yeah, then things can change and you can get some like continued pushes down. Like it can happen. But on a regular average day, we should assume that what the market's trying to do is dig a hole, trap shorts, and then push them out and turn them into buyers. Like, I'm not saying every day, but the average day, that's what's going to happen. Either it's a setup for that to happen in the future, or it's going to trigger today. If you go into the market looking for that like opportunity, you're gonna do better than if you look into the market as like an opportunity to beat all of that flow, to like catch buyers and get this 5% big black swan down day. Like, don't even concern yourself with that, in my opinion. Obviously, I'm not a financial advisor. I'm not saying that you don't need to hedge or any of those things, manage risk. But when it comes to just day trading, in my opinion, it's just a whole lot easier to be long biased on a average day. But if you're going to do that, then you need to know what it looks like when that's not working, so that you can either switch gears and go short, or else just stop trading. But if anybody is watching this and struggling with like drawing down on days like this, really consider just turning off the shorts for a while, and approaching the market like an opportunity to trap the shorts that you used to take. There will just be more trades, and they will be more likely to work. To be completely honest, like your win rate will instantly improve in most markets. Like I said, this is not the same in non-equity markets, but in equity markets, yeah, you're just going to do better in general, long only, or at least long biased. So but everybody's human, and we all have those days where, whether it's like some sort of news thing that you read, or a post on Twitter, or just like I don't know, moon phases or whatever, like you have this sense that like that we're too extended. It's due for a pullback. This might be the day that I get this chance to take this big short and push this down and get a gap down the next day, and I should buy puts, right? Like our brains can very quickly get into this like dopamine rush, basically, of like, if you've ever experienced anything like shorting a down market, it's pretty exciting. But those don't happen very often, and they definitely don't happen day after day after day out of nowhere without some catalyst. So when you get a down day like we had on Monday, now I only traded like the first 45 minutes of this, unfortunately, because I have a day job on 2 days of the week. Yeah, I'm in the clinic treating kids with autism and other developmental disabilities. So, and I love my job, but would I prefer not to do it every single day. So, because it's a lot of work. But on Mondays and Fridays, I don't get to trade the whole day. In fact, I don't even get to really watch the market after like 10 o'clock Eastern or so. Like I'm booked like solid till the close. So I didn't get to watch this in real time, but upon reviewing it, what I first saw was I looked back here and I saw that we had a voodoo range level at 15, 15, 50, and we tapped that and reverse. And then if you look to the left, Friday's regular market high was actually higher than that. See that? So we were unable to take that liquidity up there, and everybody sold once they saw that they weren't going to get paid. Oh, hi, Renan. He's back. Sorry. So normally, what, like I said, especially in a bull market, what you'll see here. Wow. Go away. You're too loud. So normally what you're going to see is everybody who shorted here put their stop right behind that high. So when it's not bearish, they're going to trap them and then take that liquidity and then usually dip into it and go higher. Sometimes that's not how it works. Sometimes they can't reach it for one reason or another. And when that happens, since it's kind of rare, everybody just kind of exits the building, right? It's like a big warning sign. That's not, wow, stop, go, get out. Yeah, it's not how markets normally work. Usually you get this and then this all day, and then the same thing on the opposite side. But when you can't even reach where all that like easy liquidity is, you have to pay attention. So we saw that on Monday. I didn't get to watch it live. I watched this live, and traded it, but had to get out and missed all this. So when I came back, and like I said, I was partially biased because of the fact that I actually had the short signal here, took the trade, but had to go to work and can't just leave a trade open. Like I mean, I could, but I'm not going to. Not when I can't even watch the market. Like, no thanks. So, opened my charts when I came to review, and I'm like, oh, we haven't seen that for a while, right? If you back out of here and you look at the bigger picture, like this is what the market's been doing up till Monday. I might have to lock him out. Sorry, he's just kind of annoying. Love him, but he wants to constantly play. And he thinks if I'm talking that there must be people in here, so he's hoping someone will pay attention to him. Oh, there we go. Wow, sorry guys. I'm not sure what happened. I must have wiggled a cord or something and realized I'm not being recorded. Okay, I'm pretty sure we're still live though. So anyway, yeah, market's been strong, and we had that failure to grab easy liquidity on Monday, and then a big evacuation as a result. Jeez, go. He's not usually this bad. I'm sorry. So if we zoom back in again to the 30-minute chart, overnight, this is what we saw. So like I said, at the close here, when I was looking at this, I was like, wow, this might actually be bearish. Like we haven't seen this forever. But then I looked here and I realized that the volume that we put in here was not as strong as the volume we put in on this lower low. So if you look back here, we Yeah, I don't know how to get rid of him. I'll close the door on him, which I feel bad, but uh, I guess I'll just ignore him and see if he goes away. But here's a low with a bunch of volume, right? That's how it normally looks when you make a new low and it's bearish. And even when that happens, you get a retracement. You had liquidity sitting behind this high. They take that liquidity and then they move lower normally, right? And then they came up. They tried to take the liquidity. They failed to get there. Immediately evacuated and made a lower low. But if you look here, as they made that lower low, they were not able to put in as much volume as they did when they broke down underneath this one here. This was, if you just line that up, I can line it up to the voodoo range level so you can sort of see it. Like this one was divergent to this one, first of all. And then this one was divergent to this one. So as we went lower and lower, there, he finally left. Yeah, like we got less and less, well, I guess less volume than this. So we're going lower and volume is decreasing. And that happens when buyers are just giving up, but aren't necessarily getting more and more sellers following through. So it's not bullish by itself, but it is something to watch for, because when you get that divergence, like you can get it here and you can still get another one or two extensions. So you don't just want to buy, but you might want to tone down your bias and not be so bearish, because if we take back that divergent extension, this move right here, the low volume one compared to the previous two drops, see this one was, if I go to a higher time frame, this will be clearer here. I'll show you. I'm kind of doing candlestick math. I forgot that. Okay, so see how this one, when you look at it like this, had plenty of volume compared to the previous one? That's normal, right? On the tiny little time frame, it looked divergent, but it just retraced a little bit, rested, and then pushed lower. So on the bigger time frame, this one really wasn't that divergent. Well, it wasn't divergent at all. But on the lowest low, that last extension into the close, where like everybody just kind of gave up, yeah, there's not that much volume there compared to the last two breaks of support. And if you look to the left, there's just no support here. So that's why you get these like extra extensions that sometimes end up being divergent. Is there's just, all they had was previous resistance that became support. But above that, there just wasn't really, I mean, there's this little thing here, and they tried to bounce off that and then flush the liquidity behind this. And up here, there was just nothing since here, and they already bounced off that one. So when they break down here, everybody who's looking short is thinking like, oh, we could come all the way back here. We could come all the way back to 15,000, right? Like, and they get overexcited and start pushing, even though there's not any like support. There's nobody there to trade with you, and you're just, the only reason price is actually dropping is because more and more people are coming into short, but there's no liquidity. There's no actual like what can I say? Like it's just it's not building momentum. You're not fighting with anyone. There's just no interest. And so when the market has an area of very little interest, what it tends to do is retrace that and see if it'll re-auction it the other direction. So if it auctioned down like it did, sorry, the volume profile covers up the wick, but if you look here, I think you can get that to, I'm going to talk about it in a minute, so I don't want to delete it, but there we go. So see how that has a big wick? So that's where all the fighting happened. That's where the buyers tried to come in, and at the end of the here, it's near the end of the day, I'll show you. And if you watch order flow, this was, if you like, I wasn't watching it, but upon review, it was pretty clear they definitely tried to save this. So see this big volume candle here, and then they just got stuck and reversed, right? And they just basically let go. See, they increased volume here relative to the buyers previous, but compared to the previous drop, when momentum was increasing, there was like it. I guess on the 15-minute, it's not quite so clear because these are separated, but there's not enough volume here compared to what you would expect. You'd think that it gets bigger and bigger and bigger, and like I said, it's pretty clear on the 30-minute. Like this, see how volume is going lower with price, like that shouldn't happen because when if it's bearish. So if this drop produces even more volume than this one and this one, it can keep going. But if it doesn't produce enough volume, what you're going to get usually is a re-auctioning of this level up here. They want to see if we take the market back up there. Are there still sellers up there that showed up here? Because they were willing to sell up here to fight off the buying, but then as price went lower, they like there was no more fighting, there was no more trading. It just kind of dropped. So the market will bring it back up, and it'll check to see if there's still more buyers than sellers there. And if there aren't, what's going to happen is it will return to this fair value, because on a bigger time frame, I think I can show this on a 2-hour. If you want to look at my Discord, you can get an invite from Twitter on my profile. I explain this better in words than I'm doing right now, but we consolidated here for multiple days and then broke down with decent volume. So when we then make a divergent low and push down with very little fighting, and like I said, there's no support for quite some time, yet there's not more sellers than there were back here. So since that's not a sign of increased momentum, the market will then bring it back up to test this last spot that buyers tried but failed, because there was interest here, but there wasn't any interest at the lows. If you zoom in and look at, well, you're back. Ronan, go away. We're not playing right now. Go. Then, yeah, you're going to come back up and check. And what you'll usually see is some back and forth rotations. And then price will either continue lower with increased volume. Oh, hello. You're going to mess with the microphone again? Is that what you're trying to do? He just jumps right up onto the desk. He's like, don't you see me? Yeah, it'll either come back down with more volume and do another extension, or it'll do what it did, where it can't return to that divergent low. It traps all those sellers, and as a result, it returns to this fair value that we were sweeping over for days. So that's just normal market behavior, and we could find that on any time frame. If we looked, you'd see this exact same pattern. This isn't, I'm not like making this up as we go. This is actually the way markets tend to work, is when they try to push in one direction and they can't get any new interest or building interest or momentum to come in as they go further in price, they're going to re-auction back to that location that they last did fight. And if there's no sellers still, you're going to return to a fair value area. And in that case, the easiest, in my opinion, the easiest way to find fair value is you're going to look at the location that you're heading, and you're going to look for consolidation. And preferably you want it to be in a higher time frame that you're trading than you're trading, but it can be on the time frame you're trading too. So like we could find it on the 30-minute chart if we're like an intraday chart if you're day trading. And you can hopefully see that we've swept back and forth through this range quite a bit. So once you find that, you can, on TradingView, normally this is the long position here. If you click on this, you can go to fixed range volume profile, or if you're using Sierra charts, you just do the draw volume profile. And then what you do is you're just going to draw the profile beginning at the point where the consolidation started, which for me is the first like doji or up candle. If it started with a down move like this, it would be the first up candle. It's easier to see in a higher time frame here. I'll show you. So this is where I would start it, and then I would continue it to the current level if I'm looking at potentially returning there, or whether or not there's good odds to return there. So here, remember, we're talking about the open, which was here. So at this point in the day, when we rejected lower, and I'm going to show you that on the algo and how we could have taken advantage of that. I did trade it. I didn't trade it perfectly, but I did trade it. The market ripped back up into the value area of this consolidation period. See that? And it closed the 2 hour chart candle inside there with increasing volume. That you don't see that if it's going to continue lower. This candle will not happen most of the time if it's going to go lower. Like, is that 100% true? No, but is it true like maybe 60-70% of the time at least? Yeah, probably more than that, honestly. Usually once you've gotten the building volume getting, because think about it, like, you are consolidating the range that you just put in. If it's bearish, what usually happens with volume when you consolidate? Well, it's a pullback in a downtrend, so you should see decreasing volume because there should be less and less interest since there's more sellers than buyers. Well, here, price is going up and there's more and more interest compared to what we had lower. That's not bearish. And they've now returned to this fair value area, the value area of the drawn volume profile. And you can see there's a big high volume area here, which is what we're going to target for the long. But we can see the dashed lines. That's the value area low and the value area high of that drawn area, which right now I'm like, the hypothesis is that this is a consolidation range that's actually extending, because again, if we've already identified that it's not a continuation of a downtrend because of we have lots of evidence of that now, right? We have divergence in volume, we have the re-auction, we have the failure to hold the market here on that reoffer, where they come back up and they try to pull it down and they can't make a lower low. That's the dead giveaway. Like, that's going to trap a lot of shorts. So when you see that, you definitely can't be bearish. But then once it gets back into the value area of the previous consolidation, well, now not only are these guys trapped who were like entering as a momentum trader, but now anybody who actually shorted earlier in the day on Monday is now going to see that they have missed their opportunity to exit as a profit, and they're going to be looking to get out at fair value. They don't want to lose any more money. They want to maybe get out at break even or at a level that's reasonable to them. Their initial stop was probably up here. So sorry about the cat. He just won't give up. I don't know what his deal is. I mean, I know what it is. It's because I'm talking, and he's, like I said, he thinks that people are gonna come play with him, because that's what always happens. So they might have put their stop up here or here, and they're planning on taking this a lot lower. And once we get back into fair value here, the value area of the consolidation, well, now they know that this is potentially going to get traded through very easily. It's just a volume profile. I just showed how to find it on TradingView. It's just right here, fixed range volume profile. But you can find that. I mean, it's just a volume profile. So, and that's just the value area, which is where 70% of the value was of that drawn area that I just did. But yeah, if you don't know volume profile and you're trading futures, you need to stop trading futures and learn volume profile, because it's like it's rudimentary to how futures move. If you don't use a volume profile and understand how to use it, do not trade futures, because that's just don't do it. But particularly the indexes, but also other futures too. But so we get back into the value area where 70% of the value was done during this period. And again, since we've got lots of evidence that it's not bearish, the alternative to that is that it's an expanding consolidation, that with this consolidation period, it is continuing. It's not over yet. We just made a lower low, and now that we've trapped sellers down there, they're going to very easily be able to bring price all the way back up to the value area high. And that, if you understand volume profile, that should make a lot of sense, because this whole area where 70% of the value was done, where most of the trading was done, everyone kind of agrees that that's a fair place to trade. So no one's going to defend it. No one's going to sell where, like, okay, the easiest way to think about this, if you don't understand volume profile, is like, if you're shopping for something, like let's say you're going to go buy a new car. You've already decided which car you want to get, you know what color you want, and you know what the fair value is. If you've got like two choices of like your like Lexus dealer or whatever that you're going to go to, you could go to the one nearby your house, or you could go to one at like the city like next to your wherever you live. There is a zone of price where it's not going to be worth it to take like the extra time and effort to like drive over to the other place to buy the thing. Even if it's a little cheaper, it's like it's still within fair value. And whereas if it's way cheaper and it's literally the same thing, you know, you'll make the effort to either wait for that price or go get it, even if it takes more effort. But you're certainly not going to go through all that effort just to get something at fair value. So in general, we should just expect price to easily sweep through here in either direction. But the hard part about having it drop now is that there are sellers on a higher time frame stuck below it. So in other words, if we are consolidating and this is fair value, sellers want to be positioned here above fair value. You don't want to sell something when it's on sale. You want to sell something when it's expensive with the intention of buying it back when it's cheaper. So if you now if you thought this was bearish, but it's actually consolidation and you sold here, you have sold at a discount. And so the only place where we should really expect sellers to be interested in defending this chart is above fair value if it's consolidating. Obviously, if it's bearish and there's momentum, well, yeah, then there's going to be more and more traders coming in as it drops looking for increased momentum. But like I said, I just spent half an hour talking about all sorts of evidence that that's not happening, that we could see before we opened. We already knew that this is not a bearish chart, even though there was a drop, a lower low, a lower high, a lack of a liquidity grab, all sorts of things that usually occur when it's bearish, but it didn't produce anything bearish. It dropped, it made a divergent low, they came back up, they re-auctioned like they're supposed to, and if it's bearish, it drops right here, makes a new lower low, gets more volume, and goes lower. When that doesn't happen, literally everybody from the highs of Monday to the lows of Monday are all uncomfortable. Anybody who sold this day is potentially going to get squeezed, and no one is going to defend in here ever, more or less. The only exception to that is if on a very high time frame above this that we're actually in a bear trend, and that this consolidation occurred like the opposite of this, where it was dropping, it came up, consolidated, went lower, and then came back to it. Yeah, then you might not make a full retrace if the higher time frame is bearish. But I'm sorry, you can tell me whatever you want about the economy and you don't like Joe Biden or whatever, but like that's not bearish. Like you just don't short that. I don't know what else to tell you. You just don't do it. Now once it's broken down, then you just don't buy it. But at this point, like this is not going to just turn around, and we're not going to give this back in a day. Don't like fantasize about, like I said before, some big black swan event, like taking back a whole week in a day. Like I'm not saying it can't happen, but I am saying it usually doesn't. So when we have evidence that it's not bearish and we have a consolidation zone right above us that we just left, and yeah, we're headed there. We're probably going to break all the way through it. Now, will we always get to the value area high? Not always, but we will usually at least get to the volume point of control, the point where most of the contracts were traded in that like time period that we drew. Like, so if we look at every single trade here and we did a poll on like, where did you do business, the place where the most people did business or the most trades were done was right there at that red line. The likelihood that when we identify this as consolidation and not bearish, and that we're actually buying at a discount down here, the likelihood that this VPOC get hit, it's something like 90%. I forget exactly what it is, but it's high. 80 something. If I remember correctly, it was way high. So that's an obvious target. And like I said, I explained this better in my Discord earlier today because I had nothing to do because the market was just going up and I had runners and no opportunities to really do anything more. So like I said, in the morning with just the candlestick chart, we didn't know for sure that it was bearish, but we had a good reason to think, or that it's not bearish, but we had a good reason to think that it wasn't, because overnight you can see if you see this as consolidation because it was divergent low and then retracement. So if that's consolidation, well, what would normally happen? Like I just said, you would return to either the VPOC or the value area high, and then you would reverse and go lower because it's a pullback in a bearish trend, if that's your hypothesis. Well, here we got to the VPOC, kind of like, trapped and chopped around, made a lower low, made a higher high. They do what they always do at the VPOC, which is trap people. And then they trap people some more down here. They trap people some more up here. And then one more time down here. And then finally, they make it all the way to the value area high. If it's bearish, this is the high of the day, because we had this really effective, defense of this area on Monday. They fought hard here, and bears effectively defended that. And so it's very easy to see this and be like, oh, we're just confirming this defense. Here's the problem. Look at volume. How much volume should be needed if it's bearish to defend something that's already been defended? Less or more? Probably less if it's bearish, right? You already, quote unquote, trapped buyers up here. So if it's bearish, shouldn't they be sellers too when we get back here? They should be helping pushing the market lower. We should not need a lot of volume to hold back buyers here. It should be what we usually see in consolidation, which is a decrease in volume and a constriction in range. And if we do get above this, which we did, we certainly shouldn't see any closes above it. And we shouldn't, if we get any attacking happening in order flow, aggressive buying, they should be easily trapped, which we're going to look at in the algo. It was clear that the buyers were not getting trapped. So here, what you'll see is they try, right? They try to pull it back. Everybody shorts, but look at volume. That's not consolidation. There's way too much volume here to be consolidation. It's way too big. And if it's the only other alternative is that the next move down is going to have even more volume than this. It's going to need to build volume. Otherwise, it's going to be divergent again. And then we're going to just repeat the same pattern over again. So, and look at the lows here, even on the 15-minute chart, you can see like that did get, compared to this, it was, look at the difference. Look at this. So there's more volume in this candle here than there was when we were trading lower than this with like ease, with no one fighting back. That means someone's fighting back is what that means, because the location does not match our picture. Our picture of being bearish should be more volume as we go lower, small retracements with less volume as they get closer and closer to the point where they're trapped, and then a reversal with volume that is now increased from this as we make a lower low. Well, if you look here, we didn't get enough volume for the drop. we also didn't get enough of a price drop because it couldn't get through the low, and it didn't even close under the VPOC of the consolidation. All of those things should not happen when it's a bearish pullback. This is not a bearish pullback. This is actually accumulation is what this is. There are trap sellers here, and they're trying and trying to defend it, and buyers just keep showing up at the voodoo range level, at the VPOC, at the value area low, and a lot of those buyers are the sellers who see the fact that they are not getting anywhere and they need to de-risk. So you get a nice opportunity here. See how volume decreases, right? So if you're a breakout trader, this is a perfect candle to break out of. And that's even better because it's another inside candle. Volume continues to decrease because now, as you can see, we are consolidating. So look what they do. They sneak under this one and then go higher, testing the volume area high again, testing this again. Volume is lower, right? Looks like typical consolidation. They trap one more time, but they can't get it even under the daily low. And look at volume. No real follow through. It's less than we had at higher prices. This consolidation period up here had more volume than this push down. If this is a breakdown, a breakout, you're going to see boom, big volume like this is what it looks like usually if it's a breakdown, if it's bearish. And instead, you get it the other opposite direction. They come back basically exactly to VPOC, give or take, and then break through value area high, break over the high a day, and here it's over. Like, there is no reason to be bearish anymore. We had like piles of evidence that it's not bearish, and the likelihood that literally this entire day is getting retraced is really high. And the shitty part is that you didn't really, at that point, if you didn't know you were bullish, you might have been able to get out of your shorts, but this was really your only opportunity to buy in with good risk management and stuff, was to buy the pullback to the voodoo range level, which is totally valid if it's bullish, and it is. So it's fine. And then it pulled right back to the fib level that's anchored on the voodoo range level, so that you could have possibly gotten it there. And then it came right up to this voodoo range level and reversed. And it's easy to see that, like, to see this and think like, oh, this push is over. It's got low volume. It's not going to work. The problem is that if you remember, we are within fair value now of that higher time frame consolidation. There is no need for volume here. You don't need volume to retrace a consolidation zone. You just don't. You only really need volume to break out of a consolidation zone and continue. You don't need volume to retrace, like we talked about before. There's no one defending it. There's no sellers who are just gonna like put money on the line that this is gonna be the high. And so while on a tiny time frame, this might look bearish because you know that this location was like a temporary resistance before. You can't get hyper focused on that. You have to look at the big picture and say, who's trapped? All the sellers are trapped. The buyers are the ones in control. This is just an opportunity to like wait for a pullback and just look for an aggressive buyer to like go further. And again, we have not. Oh, where's my VPOC? It disappears on this smaller time frame. This is the VPOC here of the higher consolidation. We did hit it. So it would be a reasonable spot to take some profits, because if it is bearish, it's going to come all the way back. And then, maybe 20% of the time that does happen. But a lot of times it's going to come all the way to the value area high of that consolidation. So they break over it. They give you maybe an opportunity to buy here if you were the problem here is, where do you put your stop? Like, you can't have a 40-point stop So, and not in futures anyway. So it's, and you're right at the value or the VPOC. It's not a great place to trade in general or enter anyway. It's a better place to exit. They come up here into the end of the day. You get one more pullback, but again, risk reward. Your target is here. I've got a voodoo range level in the way of my primary target. I could put my stop down here now, but do I have 1-to-1 to get in here? Not really. And if you look there, finally we're getting some selling. And so really we need to, if the sellers take this back, it could retrace back to the value area low, because now remember we're in fair value of this consolidation zone, and as you can see in fair value it sweeps back and forth very easily. So while it's going to keep going as long as there's no defense, if they do suddenly start to defend up here and they take this back, what I call reclaim it, they're coming for the VPOC almost every time. So and that would be your first opportunity to short, in my opinion. So oh yeah, okay, so they do that. So that's the close. They don't quite make it to our target. They're heading for the VPOC, like 80% of the time. They're going to come back here. They're probably going to bounce and then continue higher. If I had to guess, it's just, at this point, it's just a guess. But you can see that, because it's really tough to anticipate these movements inside of a consolidation area. Like, good luck. There's not a lot of techniques for that. But what I can tell you is that if I want to limit my stops, I can just not trade in here at all and just wait for my buys down here and wait for my sells up here, and things are going to get a lot easier because I'm just not trading where there's no defense. Okay, so hopefully that makes at least a little bit of sense why, at least during the regular trading hours, we shouldn't have been shorting. We had, even if you go to a smaller time frame, honestly, you had one, I remember seeing it on the algo, it was this one. This did trigger short on the algo if you wanted to be short. And it did get a little bit of an extension, but not much. And you can see that there's just anemic volume down there. Like, nobody followed that through, and they weren't able to take out the big volume bars. See, these guys got a lot of volume and they couldn't close a candle below it. See here, this has all the volume. No candle closes below it. It's a crude way to do things, but technically let's put it this way, it can't stop going in one direction until it breaks down and develops volume below that. So if you look at, like, this one got a lot of volume here, and they just can't beat it. If they can't beat it, it's not going to go lower. This one got a lot of volume here. Nothing. See how they pull back and they can't attack it? It's going high. How much higher, we'd expect here, but it's the end of the day. So no volume. So see, they just kind of dried up here. Like, big picture, it shouldn't be a lot of volume, but as it goes higher, you do if it's going to go even higher than that, like this, you do expect some little bursts on the smaller time frame. I know these get smaller and smaller, and people get nervous about that, but like I said, this isn't a good time to use divergence because of the fact that big picture, we're in consolidation, and those rules are not the same as what you use when it's breaking down through support or through resistance. Like, if you look, let me find one, I'll show you. So let's see, where's a bullish one? See, this is all consolidation. See how all of this is within the same range? You don't need increasing volume here to go higher. You can push higher here without getting bigger volume than this. And then the only time they really need volume is once they break under support. So as you can see, this candle gets all the volume. Why? Because it had to break through all the support, which includes a lot of stop orders and stuff like that. All that liquidity, they need volume to push through all of those buyers that are trying to defend that. So they need volume here, but buyers don't need volume here because we're in a consolidation range. It's not like it's different up here. Here, I'll show you. So here's another one. So these are new highs. We need more volume on the new highs. Otherwise, it's going to come back to wherever there was volume and test it. So this one was a true breakout. There's no consolidation to the left. We need more volume here than we had the last time we were in that zone, and we have it. So it can go higher and probably bounce off of it. It goes higher, but you can see now we need the line of volume that we need to break now is this one, the one where we broke out. So it's behind the candle. This. We need more volume than that if we're going to go higher. Okay, we get sell volume. That's not really good. So it's probably done because we went higher on less volume than we had down here. But again, that only works when you're breaking out into like an area that has not been consolidated recently. And so now this is going to be the consolidation zone. And so again, here you got a breakout, but note volume was not higher than it was when you last broke out into that area. So it pulls back to wherever there was volume. Where was there volume? Well, there was here, here, and here. So probably coming back into there, if I had to guess. Right there. Tests it, tries to go, ton of volume. They tried to defend it. So now they have to hold that. And they don't. So see how they gave that up? This volume was defense volume. And we're going to see this in the, it's a great setup if you can see it. The key here is for the short, is we went higher, usually with divergent volume. But then as price goes down, buyers suddenly show up to defend with a lot of volume, but not at the highs where they needed it. Back here at the previous highs, they're trying to make old resistance into new support, and it fails. Now, the tricky part about this setup is it's not necessarily just the breakdown of that. While this works often for a scalp, if you want a bigger picture trade from this, what you need to do is defend this. So if I mark this, and like I said, it's much more clear on the algo, but I'll show you what this looks like. So there's our big volume player. And if we want, we could say he probably defended all the way to here, even though if we zoomed in, we'd see his volume probably went down all the way to there. Because that's where people put their stops, is underneath the previous lows. So if we watch here, what they're going to do is they're going to come up and they need to save this guy because otherwise he's going to get trapped. So they come up. There's no volume. They can't get any volume developed above him, and he's trapped. See how this made him trapped? And then once we got underneath this, where all the volume was, we're assuming it's in this candle and this candle. Now this breakdown of that blue line is going to be a very, very powerful move usually. And then that can become resistance in the future. So it didn't quite reach exactly where I drew the line, but if we move it down to like, we can find it. Let's see where the actual volume was. Oh, and then it disappeared. Okay, let's see, where were we? I wish TradingView remembered. It's kind of annoying. Where's the blue? Up here. There we go. Seer Charts remembers where I was, but for some reason when you switch time frames on TradingView, it doesn't remember. Okay, so here is where the defense volume started. And here's where it cut off. See that? Like there's no volume down here. So we're going to move it to, I guess it is the low. We'll say this close right there. How does that line up to where volume came in on the way down and the retrace? Oh yeah, see that? So break down, try to retrace, fail to take back that level. They try with a higher than average volume, but not enough. And it breaks down. And then sometimes you'll get another one on a higher time frame, another pullback into that zone, but not always. And that would be, here, let me get rid of this. I'll show you. Right there. That's your second higher time frame entry short. And that's how that works. So see how they defended with way too much volume for the location based relative to how much volume they had higher. And then they got trapped and failed to recover it. Price goes lower. Now it's not necessarily bearish forever, but note that that level continues to act as resistance. But if you get over it and there's no more sellers, it's now support. So that's kind of cool. Now, I'm pretty sure after it's acted as resistance and then support, and then it goes through it again, it's probably done. So most likely, I'm kind of surprised to see that worked, honestly. It's going to get sloppier, most likely. Let's see if we even slow down there on the next test. Oh, well yeah, kind of. But again, not pretty. Oh, look at that. Well, that's cool. Maybe it doesn't stop working. Okay. Well, I take that back. That's interesting. So, oh, wow. That sucks. Oh, I see. Oh, good. All right. Well, that's cool. I did not know that lasts that long. That's actually pretty cool. Okay. So let's try somewhere else. Let's find another one. Maybe we can find one on the other side. Because like I said, this is a pretty cool setup if you can locate it. So if we're looking for a buy, this is a new contract, so we're gonna run out of trading days. We might be able to find it on a smaller time frame. Let's see. So we usually will need a divergent low. So weak volume at the low compared to up here. So price went lower, but with less volume. Then we need sellers to defend this with more volume than this, which is this lower than this? No, it's got to be lower than the last spot they had volume here. It's got to be below. Boy, give me that. There, it's got to be below that. Significant volume, and then we'd have to return to it. So the closest thing to a high volume defense is this candle. Let's just see. I don't know if we ever make it back to there, but let's do this. And let's see if, yeah, it just never comes back. That's the problem with doing it with the trend is it's not going to become support because you just never go back there. Interestingly, this one was resistance and then support. See, oh, this is too high to use with that same setup. So let's see if we can find another one. We need to drop with less volume than when we had higher. Let's see. Oh, that's the one we already did that one. Although that's on the high. We could maybe find, oh, here. Going lower, less volume. Oh, but we need to hold. Where do they have all the volume? It's this. Yeah, we need a big volume. Oh, right there. That might work. Does it go higher? Nope, that's not going to do it. I just know it won't set up because I can see that we go lower. So, and then that's where we are now. So that's too bad. Well, maybe it's set up on this tiny little time frame today. Let's check. Oh, well, we wouldn't know if it acted as support in the future though, because we haven't come back to it. But in essence, no, we don't have divergence on this time frame unless you want to do it that way. So then it's got to be under this. It would be this right here, this one. So that is the defense with too much volume. And so they use so much volume to try to defend this that we would expect that pullbacks get bought here. So it might work tomorrow, but we just don't have here. You know what? Let's see if we can find it on the ES. Hold on, because it's the same on ES. Let me just clean this up a minute. Because like I said, I think it's kind of a cool setup. You don't necessarily need anything more than volume to find. It's easier with like order flow, but let's see. We need to go further back because we want to actually see it work. Oh yeah, see, we have another consolidation area there. And there, I mark them off whenever we have a couple days going sideways. So, did we have divergent volume here? Yeah. So see how we went lower, but volume also dropped. So now, where's all the volume? It's like here. We'd need volume below this. We can try it. I don't know if it'll work. I don't know if it'll, because I'll show you. So it's technically this doji right there has a lot of volume, and if it's above the point where most of the volume is, it can work, but it's that's pretty close. So it may not ever get back there, if I had to guess. Yeah, it doesn't set up. So we need the volume a little higher. We need to go lower on lower volume, first of all. No, doesn't go lower. Yeah, it doesn't set up as often as you want. And see, we'd like to think that this one would work because we went lower on less volume than we had up here. So as long as we can get defense between here and here with a lot of volume, that can work. This might work, actually, still. Let's check. So here we gave it up, so resistance should be sold. And then if we get over it, it can be bought as support, which is what I'm hoping happens. I don't know how long they work, but we didn't reach it yet. So is this low qualify? Probably. So here is our volume. And there's our low. Is this above this? It's close. We could do it to here, I think. That might work. So that should be resistance for now. And then once we get over it, it should be support. Oh, they tried. They're trying right now. Interesting. Like, I don't know if the lower one is suspect, but because technically that candle comes all the way down to here, and that's below this big volume. So it's not perfect, and the low was not necessarily aligned, but I wonder if sometimes the high would work, but it's not textbook. And we went lower and bigger volume on. That's interesting. ES is significantly different. But even if you don't have divergent volume, it can still set up. We just need big volume then on a defense. So we're basically looking for a big sell that doesn't show up at the lows, more or less. But it's got to be after a low. So put in a low. Yeah, see, this one is perfect. That's like, they didn't make a new low, but they're clearly trying to defend there. And it gives you one chance and then never comes back. But this one might work. Where's all the volume? This might work right there. They're often dojis. Let's just see. So that's got a lot of volume, even though it's not pushing into new lows. And then they get trapped and it becomes support. Boom. That works. Cool. So yeah, it doesn't matter what. It's just the way markets work. It's not specific to NQ. Anyway, yeah, anyone can do that setup. Kind of fun. So let me pull up the algo. We're going to look at the 24 tick because, well, first of all, let me show you the big picture. So the algo is just taking the information that we were just looking at, and it's printing it in, it's also looking at the profile and the footprint of the actual auction, and it's pointing out things that I'm telling it to watch for. So things like aggressive traders, which are the stars, volume shifts, which are the dots, divergence, which would be the underlines, the triangles are continuation of aggression. That you don't have to understand what it all means, but it's just a Renko chart, like zoomed in, of the same information on the candlestick chart with all of the indicators added so that I don't have to watch the DOM and the footprint and like interpret order flow. I can just find my location and then wait for the signal basically. But it needs to line up with location. So on the higher time frame, I mark where the big volume deltas are. So this is the big negative delta and this is the big positive delta. The idea here is we're, rather than just looking at pure volume, we're gonna, since we have the information like available, unlike on TradingView, on Sierra charts, you can actually see like the information within the candle, you know, whether or not the trade was done on an uptick or a downtick, for instance. So when you get a Renko bar that prints with like a huge difference between buying and selling in that, or aggression basically, in that bar, that level becomes critical to hold for that side. So for instance, here, as you're dropping, if you just ignore all the rest of the signals, you can see that the delta, the red, got biggest back here. And then they didn't need a lot of delta. They didn't need that much anyway to just do this because it's just consolidating that area. They needed one right here. And the reason was to defend because they got over this one right here. So they needed to defend this with a lot of delta. So they got aggressive there and it worked. They retraced and then they tried to hold it and they failed. So once you, what I've found is with the really big deltas like this, especially on the big picture charts, if you get behind it with volume and they try to defend and then you get back under it, or if you're looking for a short, it works in the opposite direction too, and then you retrace but they can't get out of it like this, with the algo it's usually the triangles after that. But if you don't have the algo, it's just basically like continuation of that move down is going to give you usually a big extension, because what you've got is an aggressive trader who got challenged and successfully defended against that challenge. And now you're going lower. Now the thing is, you need to be aware of whether or not you're breaking under support or if you're returning to a consolidation zone, because you need to see continued aggression if you're going to stick with the trade and they start fighting back. Now, if it's all down bars, there's no question you should just stick with it. But if I watch these deltas and I look at volume aggression, in, you can look at it here too, which is the volume zone oscillator. It's just another way to look at volume. This is also volume, but it's accumulated wave by wave, like with what are called Weiss waves. There's lots of different ways to look at volume, but basically we need to see building aggression here. Otherwise, they're going to fight back. So you can see here they try to fight back. See how big that buyer is? They're putting a ton of buy volume here and very little sell volume, the little wick. So if this succeeds, it'll probably reverse and come back up to test this zone. But first they have to do something with it, and they don't. They're not able to get anywhere, and sellers come in and attack it with big delta. So since momentum is going to the sell side and sellers are now increasing as in aggression, we want to follow the trend and follow aggressive traders such as stars to that direction. So that would be your entry. Triangles work pretty good too. And now we just need to see, as we continue lower, we need more and more aggression. So this can't be the biggest. So we go a little lower, and you can see that's currently the biggest. So that's a problem. And then what do? They come right back up and they attack with pretty much the same amount of delta. And you can see I marked this one off because it was pretty significant. And I know if we beat him and then we return and bounce, he can get trapped. So do the sellers defend him is the question. So we come up. As of right now, they don't. And they get the yellow line, which is the VPOC of the individual bars, above it. And there were no big sellers in here at all. The big buyer was at the low. And so he's very well positioned buying at a discount. And then now he's buffered by this guy getting trapped. So the likelihood of this low breaking now is low because we went lower. They tried to fight back, right? They failed to fight back. The buyers tried to fight back. They failed. They tried a second time and succeeded. Whenever you've got that kind of like attempt and then failure, and then they come right back at it again, and this time they make it, that is significant in my opinion. You're going to find a lot of good trades that look like that, where it looks super bearish, everybody gave up, and then there's just no more sellers, so the buyers try again. And then if you want to be conservative, rather than just buying the stars again, since it wouldn't have worked here, why would it work here? And but once they recover this, well, now pullbacks should be bought. And what we can look for now is a sell delta that's even bigger than this showing up here, because that would give us a potential rip to the upside. It doesn't happen this day because I just traded, so I know that. But what you'll see is the big delta on the bottom acted as support, which is very normal. And then they try to defend this. See that? But look at the delta. It's weak. And then here, if you draw a line down here, they're not putting in as much volume, delta, as much aggression as they did the last time they were at this price. And below this price, there's even less volume delta to the downside. So in other words, we can see just from the delta and the price, without knowing any other of the indicators, that the sellers are uncomfortable here and that the buyers actually have an advantage. And then we can also see that our ideal location would be back into here. And so they come back into it, they bounce again, and this time it holds. So yes, it took 2 tries. And if you look at delta on the upside, the guy that is well insulated underneath the trap seller, you can see that this was all consolidation. This was not breaking to new highs, right? We were just retracing this move. They don't need more delta, just like they don't need more volume. They don't need more aggression either to hold this. They will need more delta as they start increasing in momentum, but this is not, I don't think anyone would call this heavy momentum. This is just consolidation. So here it looks like balance, and you could say that shorts up here worked and buys down here worked, and that's true. But if you look at the bigger picture, because you had such success by sellers and then suddenly they stopped being successful, and buyers first were trapped and then came right back and had success, well, when those buyers defend here and they didn't need more volume delta than they did at the lows, like I said, this guy becomes insulated and it's very hard to take them out. So you would have confirmation around here once you're breaking a high. And then now you should see deltas increase as the price increases. It doesn't necessarily have to be bigger than where it was at the low, but it like the low, because that condition was quite a bit different. But this low to this break, we should see some increase in delta. And if we don't see that, we might need to wait for a pullback to enter long. And in this case, you got the increase right there. And like I said, it does not have to be this big. You just need to see this, the build. But again, it's consolidation on a bigger time frame, so you technically could continue to go higher without the delta. But if you get the divergent delta, you might get more defense from sellers. When you get more delta as you break out, there's just nothing the sellers can do, and they just totally give up. So you can see here, you're pressing harder and you haven't hit this delta yet. It's still okay because we're not breaking to new highs. We're just retracing still. So while on the big picture, it's consolidation. You don't need more volume in delta. But on the smaller picture, it's a breakout. So you needed this time frame here to go up. Hopefully that makes sense. It's just these concepts are fractal, and you have to keep in mind that like the bigger time frame matters more, but the little time frame matters sometimes. So we return to another high delta area. We break over it. So now we want to see it hold for buyers to continue, but that hasn't occurred yet. So that's the big time frame of what happened. Oh, and then if you want to look at the even on this time frame, like once you identify that buyers are the ones in control, you can start buying, for instance, triangles and be pretty comfortable that those aren't going to give more than a 2-bar pullback. So, for instance, like I said, this triangle, we wouldn't be sure that buyers are in control here. But by the time this guy gets retraced here, right, we got above him. Well, now, if we don't want to buy a triangle on the first breakout, that doesn't make a lot of sense. But if you can get a pullback and get a triangle like this or like this, usually if you count 2 bars back, that will usually hold. Is it 100%? No, but it's damn near 70 something. So on whatever time frame you're using. Now here on the 67 tick, this first entry would be 942, and your stop would need to be under 87, let's say. So that's it's a little large, right? It's not huge, but it's too big for me. So I personally, well, to do with futures. So I wouldn't be taking that trade on this time frame, but once I see that we've gotten above this guy on this time frame, what I would then do is go down into a smaller time frame. So this will remember where I am. So there's the breakout and the close above. See how the VPOC, the yellow line, got above this dot? That is like the confirmation that buyers are in control. And then if I go to the 24 tick at the same exact time, which is right here, and I know it's got a lot of, let me hide this. So we don't need to worry about that right now. So now, like I said, what I want is I want to return to support and get a triangle up. And preferably, since I'm zoomed in a little bit, I want to make sure that I've got some sellers trapped. So the easiest way to see that, there's a lot of ways, but the easiest way to with an untrained eye that doesn't know the algo well and what all the signals are, is if you just look at the deltas, look for the big deltas and make sure you're above them. So for instance, if we draw a line here, we've got a big negative delta. So the heavy hitters on the sell side. So if we mark these and we say, I can be a buyer if the higher time frame is bullish, which we just established it was at this point, and I'm above these big deltas, and I have a triangle. So, all right. So right now, I need to either be above these two guys, or I need to target them as my first target. So, and again, we didn't know that we're definitely bullish until we break this and closed above it on the higher time frame. So now we're going to watch for big deltas, and we're going to see if we can get above them with triangles, up triangles right there. So big delta was on this one, and we're above it on a triangle. Yeah. And this delta was even bigger than this one, so it's even more meaningful. So this normally would be a decent entry. Is it always going to work? No. Sometimes it will not work, but it will work more often than it won't. This one I think stops, and so so it stops. It's a 2-bar stop. So in this case, we'd be getting in any time during this pullback would be an okay time to enter, and but it's valid at 67, and our stop goes at like 43, let's say. So not a huge stop, but if you're using 2 contracts, you're risking maybe $400 per trade. But again, you're trading right into resistance. So would I personally take this trade? No, but I'm going to count it as a stop because I'm going to demonstrate that more likely than not, it's still going to be 70%, even if you took these with poor risk reward. So pull back, We're watching for big deltas. Did we have any more big deltas in here? No. Are we above this big delta? No. So I'm not looking for triangles right now. We don't get one anyway. So we wait. Okay. Oh, we got a nice big delta here. Be good to get over him. Still no triangle up. Again, we've had one stop and 0 wins. Okay, there we go. Did we have a bigger delta? Yes. Where is he? He is the third one. So this one we have not gotten over. So we're going to wait. We're going to skip this one and be conservative. Even though the location is great, we're going to wait to see if we can get over him first because he might act as resistance. Does he always act as resistance? No. Do we sometimes miss the trade because of that? Yes. But we get another triangle that's clearly above it. You can see that he's definitely the big delta. So this is a buy. And that one is close. But I think let's call it a stop. Let's say it stops again. Right? Again, did you have great risk reward? If you knew the algo, you'd know not to buy right into this line. But let's say you didn't know that. 2 stops, 0 wins. Right? So right now you're like, this isn't working. This sucks. Okay, now you get another one. Triangle up. Is it above the big delta? Yes. You also got this big delta, right? Is it above that? Yeah, close above that. So we're going to buy that. And again, we're down $800, right? Okay, and that one gets you from 25.50, so we'll say like 26 to like 54. So we'll just say like, let's say you got 25 points out of it. So now you're back into like you're close to break even, not quite, right? So we're going to wait. Now, you could still be long on trailers, by the way. There's our next triangle up. Is it above the big deltas? Yep. So we can buy that again, right? Oops, I don't have to do that. And that one, does it stop? Now, how much did it get us? I think it got 10 points, did it not? It did, just barely. So I got my risk off here and then trailed out the runners. But note, this one is still not stopped. So that contract is still running. But this ad, I got 10 points on one and then lost 20 on the other. So it's like more or less just break even, let's say. Because we won 10 with one and then lost 20 with one. So we took a loss, but nothing like a big stop. So again, we get it again. Oh, but by the way, if you would have been paying attention to where the big deltas are, there was a big delta up here that we identified back here. That's your target. So really, you got there, and you probably wouldn't even be holding anymore because you got to a big delta and you reversed. So I'm personally probably not even taking a 10-point stop on that, but let's say you did, and so now you're down maybe $500. So here's another one. Triangle up. Are you above the biggest delta? You are above. Are you above this one? You're above this one. Yeah, I'd say that's a buy. And again, you'd want to be taking your first profit here, and your stop would go underneath the green. And so you get your 10 points or whatever that is. Let's just call it 10. And does the runner stop? The runner stops. Okay. So again, we're maybe negative 600, let's say. Okay, we get a big delta, but the bigger one's here, and we're not above it. So we wait, not taking that personally. It did get above this one, so if you wanted to, you could, but it's a little dangerous. This one works beautifully, but like I said, I skipped it. I missed it. And here's the problem, is on the 24 tick, you may not get another pullback, right? So if all you have is the deltas, while normally it works pretty well, and like I said, here it just depends on whether or not you want to take it off this one. It depends where you drew the line. If it's here, you're like right on the line. If you said that this is the one that's going to be resistance, then you would have skipped it, right? And you might still be down, but you didn't get totally annihilated shorting. And then we're still waiting for triangles to be able, and we just actually didn't get one. So on the 24 tick, you just didn't get a lot of opportunities. There's one. Above the biggest delta? No, not above the biggest delta. It's at the high. So we'd wait and we'd miss that one too if you didn't have another setup. So there's one. Definitely above the biggest delta, way above it. And did we get 10 points? That's the high, right? Oh, never mind. We keep going. It did not stop. The stop would go here. I think it gets 10. Let's say it gets just 10. But I think it got like a little more than that. Now, these ones, triangle, did you get above a big delta? Yep, right there. The stop goes down here. You got your 10 points. This one, did you get above the biggest delta? No, that's this big red one. So you're not taking that. So this one probably would have made you, what did we say? We're trading 2 contracts. One of them gets off at 10. So like 200, 200. We're probably break even now, give or take. Maybe a little bit under that. And then here we got above the biggest delta, did we not? And that one stops. And then it probably does not set up again. Okay, so on the 24 tick, like I said, it didn't set up where we wanted it to. It did not end up getting, with just that setup, it did not end up getting the big win rate it usually does, because we just didn't get a lot of rotations. But it didn't get a short, so that's good. Now on the smaller time frame, if we're using the 15 tick, you're going to get a lower win rate, but more opportunities to catch these big moves. So here, for instance, there's a 30. We said that we needed to wait until we made that high. And then we've still got the deltas marked. So was this above a delta? Where does this one come in? I'm probably not taking that personally, but it works. This one definitely got above it, and that one works. So that's 2 for 2. This one is under it. See how this? Oh, actually, it's way under it, because on this time frame, it's here. I'm moving the wrong one. It's this. So we're definitely not taking that right into the... Oh, but could you take the short? Where's the big... You could take the short. So if you're not convinced it's bullish, you could take that short, and that works. The big delta's up here, so you're not taking that short. And the big delta is beat. You might take that long. And that one stops. This one sets up right again, and that one works. Then big delta's back here. You beat it. You could short that. So see how the smaller time frame is going to rotate both directions. So you could technically trade these ranges more easily. And then here, are you above the big delta? No, so I'm skipping it. Yep, and it fails. Oh, and then this one, you're below the big delta, triangle down, short. Works. Triangle down, below big delta, short. Works. Triangle up, big delta's way up here, I'm not buying that, and it fails. So now this one is like 80% right now. But again, in rotating markets, that's when this is going to work. When it starts going one direction, unidirectional, it's going to either not set up or work. Above, it's close. This one is the biggest delta. I'd say it's not. I'd wait. And this one is above the biggest delta. Right into yesterday's point of control. I don't love it, but it does work. This is not below. We're not shorting. This is not above. We're not buying. Triangle up. Biggest delta. Yeah, we're above it. Oh, wait. I'm wrong. It's this. Nope. We're not above it. We're not even. We're not above it. Not at entry. Are we below? Yep, you could short that. That works. Triangle. Biggest delta. Way up here. Not above it. Yeah, see, you miss it. And not below it. Not shorting. There. Now we're above it. And that one works. So you can catch it. It's not that you can't do it. It's just, it might take you a few tries. But if you're getting 10 points, 10 points, 10 points, 10 points, yeah, like you're gonna do okay most days. And then the key is when it starts going straight up. So here, big delta was this purple one. So this one was not above. So you missed the first one again. but this one was clearly above. And that one, the pink one, you catch. And so if you were up maybe like 500 before that, now you get 10 points on the first one. So you're up 700, let's say. And now your runner just goes for the whole damn day and pays you an extra $1,200 or something, depending on how far you go or how far you hold it. Again, you've got plenty of other ways to find entries other than that, but it's a very simple strategy to start with. But for instance, another relatively simple one is to look for stars to see if you can get beyond or behind the stars. And then if you can, and they can't reclaim that level, it's trending. So here's a star, and here's another one, right? So I'm just going to mark both of these. So I need to, whoops, I guess I can't do it that way. Well, it's about there. So I need to get above it and then hold on a pullback and break through it and then get the triangle up above it. So broke above it. I need to come back and hold. We hold. That triangle's still inside. It's not good enough. Okay, we can't get out. Nothing to do. Hold. That triangle's inside. We need one above. No triangle. Pulls back. Doesn't hold. Right? Nothing to do. And they rip right through it. And now I've got another triangle, or star, here and here. So let's see if we can do the same thing. I don't know if it sets up. Get out. Retrace. I want a triangle. Oh, I'm not going to get it. Yeah, it just doesn't do it, right? You got a star instead, which technically you can they're a little interchangeable. But we did get above these down here. Oh, there's no triangle. So yeah, the only entry would be the star. But if you marked these off on the 24 tick and then jumped to the 15 tick and said, I need to be above this and get a triangle, well, now you're getting long there all day. So, like I said, it doesn't have to be complicated, but to keep things simple, you need to avoid being confused about which direction you should be trading. And that is going to depend on your location, and trade location involves identifying on the profile where you're likely to see defense and no defense. So if you understand the first part of this video, the first hour or whatever, of how to use volume profile and determine whether or not you're consolidating or not, and whether or not there's people trapped, once you can do that, then it's literally just a matter of finding that level, that time period where you know, and then zooming into order flow and determining whether or not that level is being held, and then finding an aggressive trader to follow through above that if you're buying. So, or else finding a seller that's trapped and then getting an aggressive trader that's above that if you're buying. So while the signals all look confusing and there's so many colors and stuff to learn, in many ways they're all kind of the same. Like, it's just different ways to like see the same information. And since I've been doing this for 2 years, I've been able to one at a time build more and more setups. But someone brand new would not start with this many signals. They would start with something like this, with like triangles and stars, and that's it. And just get a feel for that. And then once you like master those setups, you can learn that, like, you know, your win rate's going to improve if you wait for XYZ to happen before you take that setup. And so all of a sudden, like, you add divergence or add, you know, the diamonds and other things like that. So the outline bars. And so you can go down quite the rabbit hole if you want to, but you don't have to. And there are people in the room like Ronnie that, like, he literally trades the same 2 or 3 setups every single day. And like, there's most days he trades better than I do. Like, his results are better. Like, so more is not necessarily better. I happen to be a little bit ADD, so like I need a lot of things to look at. Most of you will not want that. This will be way too much. And you can just look at the simplistic version and pick a setup or two and just wait. But like I said, if you ask me to wait and stare at something that and there's no like nothing to do with my mind, I I get lost. So it's like the opposite about what most people are like. Most people get distracted the more they have. I need extra information to give my brain something to stay busy with to like confirm that like everything's the way I want it. And yeah, it sometimes means I miss setups, but it also means I get really good at identifying the patterns. And yeah, everyone's got their strengths and weaknesses, right? So, like I said, if this is something you want to learn more about, you can email Simon at trade, the letter N, word perform at gmail.com and ask Simon about a 5-day free pass to the room, learn about the algo. There is a charge monthly to get the algo on your desktop and be part of the room, but it's actually very affordable. And then you can always contact me at Twitter at RedBenTrader. All right, hope you guys learned something and did okay today. Let's take what we learned today and apply it to tomorrow.